Hello and welcome to KYC. I am Sharad Dubey, your host and host, and let's start the show. Very interesting company I have got for you in KYC. It's recently listed, but I'll give you some hints. Try to guess it. The logistics service provider for e-commerce, express parcel and value-added service. We also call them 3PL. This is the new word which we have got for the last 2 to 3 odd years. It's backed by big names. Flipkart, 8 Road Adventures. You must be getting the vibe of a VEPC. Yes, it is largely funded on that. Promoter stake is on the lower side. We'll get you on that. And the other important thing is it's recently listed in January 28, a very limited period where we are getting this company, but a lot of interest coming in this stock. And currently the stock is trading below its IPO price of 124 rupees per share. Well, it'll be very interesting to know which company this is. And I don't want to keep you in the shadow. This time I'm going to give you the answer a bit early. The company's name is Shadowfax. Let's get them on screen. Think ahead. That's the tagline. Pretty much interesting. But why are we calling this company? Of course, there's a lot of interest. A lot of you have written to me for KYC to get in new listed companies as well. But remember, the history would be a bit less and I will tweak the ratings as well. But let's get on the key questions. Why are we actually getting this company here? The revenue margin guidance, this is very much important because this is still an evolving business model, at least for this perspective, and also on the financials. It is not an old business, it's a newly made business, and now it's moving around the 3PL industry growth rates and the company's market share. Of course, the market share is looking on the higher side, so we'll get in all the exact numbers from the management. Another important reason to call this company on our show in KYC is that any acquisitions plan, generally these companies have a bigger war chest for cash and they might look at some inorganic way of moving ahead as well. Apart from this, also the demand inquiry trends, especially for the B2B clients. Remember, if a CVF cycle starts, which is already therein, it starts benefiting logistics companies. And if we talk about logistics, that's why Shadowfax is over here. What's the growth looking like for both the express segment? Is it actually outpacing the hyper local segment? That's what we will try to understand. There are these two business segments which the company is looking at. FY27 capex plans, there's already a little bit of moderation in FY26. So that'll be pretty much interesting to talk about this company. And also the new growth engine. There are a lot of key initiatives which are coming in. Same day delivery, larger delivery, luxury delivery, all sorts of things are there, and it makes us, a bit at times, it becomes overwhelming for an analyst to understand so many things happening just for one odd company. But it's possible, it's India and it's the startup space, and that's where the surprise happens. And on the show is Abhishek Bansal. He's the co-founder as well, the CEO of the company, where we will talk with Abhishek on his journey and the company's growth aspects as well. But let's give you some more details about this company. Ye karti kya hai? What does the company do? Of course, about the company, we had mentioned you that it's a tech-led third-party logistics, 3PL, that's the full form. Every time this PL word will be coming, so it's not profit and loss, at least for a logistics company, it's 3PL, it's third-party logistics company in India. Another important fact about this company, it's focused on enabling the digital aspect of this commerce, especially in express logistics. Also, we focus on the asset-light model. That's pretty much interesting. It's operating across 15,166 pin codes, and that's a large exposure area. But nevertheless, there is a big scope to grow. Also, India is a big country. 23% market share they have for India's e-commerce parcel shipments. That's a good market share coming in from the base which they have grown in the last 3 to 4 years. Express forward parcel delivery is for the e-commerce and the D2C brands as well. So whatever you're ordering from phone, a lot of back-end work is being done by Shadowfax. That's why it's actually in the shadows, but it's very much prevalent. And look at the big names. I'm sure you must have shopped from all these larger brands, and the people behind it is, of course, Shadowfax. Also, looking at these clients, it just keeps on going, and these are a part of our everyday life. So this company also technically becomes a good player in that. The reverse logistics, reverse pickup market leader by volume. These are the other products which the company is focusing on. Quick commerce also, it's there. The hyper local, as we call it in these terms, they might look a bit difficult, but to be honest, this is the startup parlance. So I'll try to explain you slowly what actually this is all about. Same day and next day delivery service. This is where everybody wants. I want something in 10 minutes. Maybe you want something in just a day. That is where Shadowfax comes in. Also, apart from this, these are the hand-in-hand exchange deliveries as well. So these are the nitty-gritties, of what things are happening behind the screens, and that's what I'm explaining you. The revenue model, paisa kaise aata hai? This is called fee per shipment, order delivery. That is how these metrics work. That's why I just wanted to give you that, but I'll show you the revenue. That will be more simple for you, and that's what I'm talking about. The revenue, the top line numbers go up in these type of companies because they are still in their growth phase. That means the growth hasn't stopped. That's why maybe the markets are giving a very high valuations, but we'll come to that. Also, apart from this revenue model, we'll talk about the forward express parcel, how the numbers have changed. This is the growth coming in 8%, and now it's at around 23%. It'll be very much interesting to see whether they can touch the 25 or 30% mark in a month or a quarter. There is market share picture, of course, is the largest 3PL company for reverse pickup shipments. That's one thing. Apart from that, there are 3-4 other important points. This is the largest 3PL company for same-day delivery. And this segment, we are seeing something much more happening in the entire market. Largest 3PL quick commerce for quick commerce deliveries also. 10 minute, 15 minute, 20 minute. That's what you call. Also, is the operational performance. This is the number, the Q3 numbers I'm talking about. Express is doing better than hyperlocal, but you never know. These models keep changing, the companies keep pivoting, the mindset is startups. So it's a bit difficult for a public player analyst to understand these models, and that's why maybe the markets are not giving the premium which the company might get. This is a very important news coming in. One NCR is the largest automated sortation facility to date. We'll ask more details about it. It's a very recent announcement coming in from the company. The facility is now fully operational, roughly a 50 crore investment we could talk about, and this is roughly a 2.1 lakh square feet facility in the NCR region. So this is the recent news coming in when it comes to Shadowfax. So pura detail aapko to bata diya company ka, but I'll explain you the ratings, how we go about it in KYC, what are the rating parameters, and remember, to be fair and one of the loved KYC shows we will change some parameters for a company like this, because it's not fair to judge one company with all the same parameters. Of course, the basic things remain there. This is the holy grail. I won't change that ever. But the operational parameters I'm getting, because return ratios is not fair to actually get these numbers right now. Let the company mature in the business model. Shareholding street cat, this is very much important. But remember, it's a very small time period. So you won't get anything on a time basis, time series analysis. So we have to be very neutral on that aspect. Valuations, yes, we'll focus on that. Outlook, this is very much important on the future and the industry. So we'll get you all those details. But right now, let's go into the first rating parameter, and that is the income statement. Income statement, largely, you see the companies like that, the growth comes on the top line. The focus is always on the top line, and they are doing what they are told. The way the model is set up, the PVC funding is there, and that's the growth coming in. Also, if you're looking at the bottom line, so you must be wondering, Sharad, why the profits are not going up? Because company is in a big expansion phase, and just getting path to profitability that the company has achieved, but how much more will it go up? That is something which we'll talk about. But if you're working at scale and the benefit starts coming in, that is where some amount of good upflows can start coming in, and that's a little bit of that hint has already started coming in. This is just the Q3 numbers, so I would just like to give you the longer pictures. Definitely the path to profitability has to go up more, but look at the moves which are happening in Q3. So that is something which is showing us that the story of Shadowfax is intact, and that margin jump also we saw. Whether this will hold up that 6% margin, that's what we'll be asking Abhishek. But as of now, the story, the movement from Q3, from the lower numbers, at least in the profitability and margins, has gone up. So that is something which I liked. But long-term company needs to prove more, and that's how it's evolving. So let's give it time and give a neutral rating when it comes to the income statement. Balance sheet is also very much important, and largely balance sheet is really well funded, to be honest. And you see the borrowings has also come down. The IPO listing was there a month ago, so not much there. The balance sheet strength is very strong, and even there's 191 crore cash as well. So some acquisition or treasury management is always there. So to be honest, balance sheet is very strong. So I'm going to give a thumbs up when it comes to the balance sheet. But cash flows is very much important also. Logistics industries, at times the cash flows get lumpy, and there is some seasonality impact also. There's a festive season where you get more orders, and let's just see how that has panned out. And I've just taken data till FY25, and largely the data is kind of showing some positive moves here. But remember, this cash flow segment is a bit lumpy. Just to give a benefit of doubt for both the long-term investors and even the short-term traders, at least the cash flow segment is something, even if you could say that you could skip this, this is fine. It's a neutral rating coming in, not much happening. But nevertheless, FY25 numbers are decent. Let's talk about the operational parameters. You must be wondering, Sharad, where are the return ratios? Return ratios I have not taken. The model is a bit different. So let's focus on the operational part, and that is where my interest is there. Express and Hyperlocal doing really well, and that is something which you should be looking at least for this stage of the business cycle of the company. Let's move ahead. Any other important operational parameters are there? And yes, other segments are also there, other logistics segment, they are also doing well. So if something is going at an average of 50% plus, that means it's in the right direction. And if it's in the right direction, I'll give a strong thumbs up when it comes to the operational parameter. But let's see the shareholding. Remember, we just have one data itself. The promoters, you don't have so much stake, but remember, there are large investors already there. This is how the model works. FIs, DIs is between 9 to 16%. But if you're seeing public just doesn't only mean the retail or HNI, it also means some large PVC investors who are classified as public. So net, it's a neutral rating. Let's give it more time and see where the institutional money starts moving in here or there. Let's talk about street cred. That's our fourth parameter. It's been flat since IPO listing, that 124, 120, that is where the stock is moving. And let's give it more time, to be honest. This is the price you must be looking at. You must be checking the prices at which you must have entered after the IPO. Or if you have got an IPO allotment, you are still stuck there. It's just been a month, but remember, February has been a very volatile month. Maybe the Q3 numbers are not factored in yet, and there's a lack of analyst coverage also. So that's why I'm here for the KYC show, so that everybody listens, be it the analysts or even the fund houses who really like our show. So it's a neutral rating when it comes to the IPO pricing, or you could say the street cred. But valuations is very much important. Sometimes it's questioned in the higher IPO mispricings from new age tech companies. Sometimes the old investors, old thought process, they do not like that. But at times, of course, as the earnings go up, the lumpiness starts coming in and the normalization happens. But I have taken a P, in our analysis for this. Shadowfax is at 200 times. See, remember, the profit numbers are on the lower side, but the numbers are numbers, and that's what we are here to give you, that perspective. Around 60 times P ratio is delivery, and Blue Dart is at 37 times. So right now, if you look at valuation, you want to enter the stock, it might not be the right time for you. This is for some investors who always have some opinions on higher valuations. So for that, I have given a thumbs down when it comes to the valuations front. Let's talk about the outlook. This is very much important if the stock is listed right now, 1 month ago, or if the stock is 100 years ago, it has been listed. The most important thing is the outlook. What lies ahead? That is where stock market gives you the valuations and the price movement. One NCR, the largest automated sortation facility, that's coming. That's something which will be very much interest of. Capex might be moderating to almost 4% in FY26. The number was, if I remember, 140 crore rupees. So we will understand a little bit more about it. The diversification growth engines, of course, the quick commerce, time sensitive segments, the luxury segments, the heavy goods segments, are they over diversifying it, or everything is under control? The CV upcycle, will the logistics also start performing because of that? And generally this happens. First CV comes in, then the logistics comes in. So it will be very much interesting for us to check this. This is an industry perspective. But whenever these industry perspective things happen, there's a consolidation always at play. So you might find a lot of mergers, acquisitions coming in, and when the larger players come in, you'll have 2 or 3 larger players actually commanding a bigger market share, and we are going in that industry. So this is very, very much important. As of now, outlook looks very strong for me, the way the company is going up. So it's a strong thumbs up. But let me give you the entire picture of the ratings. We spoke about the company, what the company is doing, what the company will do. But let's give in the ratings, एक revision हो जाए. Income statement is largely neutral. Balance sheet and operational parameters are really strong. Cash flows, let's give it more time, and same thing happens for both of them. Valuations, if you're looking at, then certainly not, this is not the company for you. But outlook, the future, that is also very strong. So all in all, on the higher side of the KYC ratings which we give at an average, it's 5 out of 8 when it comes to Shadowfax Technologies. But to give us more perspective, we'll be joined by Abhishek Bansal. He's the co-founder and CEO at Shadowfax Tech. An interesting trivia about him: he's an education from IIT Delhi, and also he has worked with Hay Group as a business consultant. So Abhishek would be joining us. And Abhishek, it's always a pleasure to talk with you. Good afternoon. And a very strong Q3 numbers also has come in. Just want to ask you on your new announcement first before we get into the other details for KYC. Is one NCR. What is this automation center all about? And how does it change a lot? Because in your presentation I've written there's an inflection point also. Now just give us the example, or maybe what does this inflection point mean? One NCR's automation center which has come in.
Yeah, thank you, Sharad. So One NCR is an automated center. We have been building it for the last 18 odd months. It's the largest sortation center today that we have set up. Today, Shadowfax runs close to about 55 sortation centers pan India. One NCR, what we have set up, is a fully automated single touch center where right from batch sortation to shipment sortation, we are able to basically consolidate all volumes in a single facility in North India and then basically ensure that they are efficiently moved across the length and breadth of the country. What this facility helps us build is an extensive mesh network where more than 50 cities will have direct connections on a national level. Another probably close to 70 to 80 cities at a zonal level will have a direct connection from a single facility. It gives us incredible advantage from a speed capacity standpoint. Think about it. I mean, we as an organization, our express parcel business, we are the fastest growing logistics player in the country today. Our business is growing at north of 60% year on year. We are at a point where, with this kind of a growth, we are investing in some of the futuristic facilities because we believe a very, very healthy growth number is going to continue over the next 4 to 8 quarters for us. What you saw, what you were speaking about market share, we have rapidly gained market share over the last couple of years. We believe in this market, we will continue gaining market share over the next 4 to 8 quarters. And that inflection point is something which a facility like a 1NCR will continue enabling us to deliver on the fastest speed and at great cost.
Abhishek, of course, we spoke about one NCR, but will there be other 2 NCR, 3 NCR, or maybe one MMR also?
There is a lot more in plans. We will continue to do automations over the next few years. If you look at our historical numbers, close to 55 to 60% of our automations happen within our sortation centers. As a guidance that we are given to.
Right. And Abhishek, when you speak about automation, of course, there's an engineer in you. I'll, of course, ask the second question on AI. And AI, automation, and definitely the space you're working at, how are you deploying that? And do you see this, big operational efficiency coming in from this? And if yes, will we see that in the next 4 to 8 quarters?
Yeah, absolutely. The guidance that we have given is that every year we'll continue improving our profitability by anywhere between 100 to 150 basis points on a yearly basis. Whatever you're looking at our numbers, it also includes the cost of all this expansion, cost of building some of these facilities. And when you look at our profits, when you look at our EBITDA, it actually includes the total cost of growth as well. So some of these facilities have a very, very long duration of build up. As I said, it takes about 18 odd months to get a facility commissioned. So some of those costs continue to be part of our net profit as we are looking at. Year on year, as we continue to grow, we will see a lot of operating leverage coming in, and one should expect anywhere between, as I said, 100 to 150 basis points of profitability jump every year in our numbers. On your question on AI, AI has become one of the most important elements for us in deploying some of these automations, and that's why using AI, deploying these automations right now gives us a competitive advantage as well. One of the big advantages we have created in our sortation system is dynamically based on the load prediction, you can figure out how many shipments do you want to bag based on direct sortation or indirect sortation, so as to optimize on the cost. And it's a very sophisticated IP-driven predictive model that we have created in our organization using data engineering, using artificial intelligence. We also have created our own mapping system. See, in India, it's very, very surprising. 9% of the customers in India either enter a wrong PIN code or they actually don't even know their PIN code. Looking at address and sending them to the right location using our PIN code fix engine, using our own mapping engine is a huge competitive advantage that we have built over a period of time. It helps us give us a great cost advantage. It gives us a customer experience advantage. Today we use everything on our own mapping system. We don't use third-party apps. And this entire mapping engine that we have built is built on top of our AI engine that we have internally created.
And Abhishek, let's just give us, the market of 3PL and your market share. It's around 23%, right? So how much percentage the market is actually growing? And of course, you are doing better than market, and that's why the market share gains is coming, at least in the organized space. Just wanted to get some numbers on it. Maybe if you like, maybe 25 or 30% market share, can we touch that in the next couple of quarters?
Absolutely, absolutely. We are definitely on track of that. See, to understand our market share and the whole story around it, as you would understand, in India's 3PL space, there are very, very limited players now. It's a fairly complex sort of activity that we have got into, and there's been like this place is largely governed by 3 or 4 players. Okay. In this market, one can also understand is that our customers don't want to work with only a single partner. They typically choose to work with 2 or 3 partners because they also want to diversify and ensure that they are able to optimize on the right cost and the right experience by choosing the right partners. What we see is our customers actively diversifying, and with our cost value proposition, with our new age services, with our focus on value added services, customers are loving what we are offering as a tech driven player. And historically, that's why despite being in a competitive market, our market share has grown from 8 to 23%. I think you're completely on track. We will continue gaining market share. Assume the 3PL market to grow anywhere between 15 to 18% at a market level. We will definitely be growing faster than that.
Exactly. Right. And Abhishek, the way you are growing, it seems like, a management student in me would think that, hey, let's do a little bit of acquisitions also, something which is around your, circle of competence, or the thing, which will help your business all around. Are you looking at something here? Because I feel like there might be some inorganic acquisitions at play.
I think, just to be honest, we are not actively looking at acquisitions. Our hands are too full, focusing on the core business, be it e-commerce, be it quick commerce. We are seeing very, very high levels of growth in the market right now. Our focus is to double down on the segments where we know we can gain market share, build operating leverage, and convert that operating leverage into profitability, build market leadership in each of the segments where we exist in today, and then think about some of the diversification through acquisitions. We did do a small acquisition last year. We acquired a company called Critical Log, which focuses on movement of luxury products. But I mean, that's something that we did last year. No immediate acquisition one should expect over the next maybe 4 to 8 quarters.
Okay, so 4 to 8 quarters, I think the entire management and the team is locked in. 4 to 8, 4 to 8, 4 to 8. We have been hearing that. But the new growth engines are also there. You spoke about luxury. You spoke about, the heavy industry, the single day product delivery segment. It gets very technical for me and some of our audience also. But the new growth engines, if you can just simplify it, what would that be?
I think the new growth engines are exactly the areas where we are looking to gain market share, where we have little presence. We want to just enable that. Shadowfax started as a service for delivering smaller products. Now we are diversifying and growing up into larger products through the same supply chain. Think about a suitcase or an aquaguard, or a large package of diapers. Okay, so that is something that we have got into over the last couple of quarters. Moving forward, we are about to launch white goods as a big category. I think it's a segment which is very, very interesting, where we have very little presence. And typically, when you're delivering white goods, your average realization per order is far higher than delivering a small good. So I think that's a very interesting segment. Using our existing supply chain, how we are enabling white goods in our white goods furniture, some of the other categories in our business. Same day delivery is something which helps our D2C brands compete with hyper-local services like quick commerce on one side and Amazon Prime on another side. Today's D2C brands want to do self-fulfillment. They don't want to work with aggregators, or they don't want to work with basically some of the demand generators, because they completely kill their margin. They want to work directly with third-party logistics companies, do their fulfillment. With our same-day delivery service, it is today the fastest growing service we have. It is a big differentiator that D2C brands basically get from us. In very, very simple ways, let's say you go to a brand.com website, you're sitting in Mumbai, you're placing an order by 12 o'clock. What we essentially promise is delivery of that by end of day, okay, in your same city. If it is a different city, we fly that shipment overnight, deliver it to you next morning. Today, this service is applicable in more than 30 cities. We are the market leaders in doing same-day delivery.
So Abhishek, we spoke a lot about your business, but there's this one question I get asked by a lot of my Gen Z folks, they keep writing to me and they want to put a question to you. The question is, someone who is 20, 24-year-old right now looking at you in our KYC show, they want an advice as an entrepreneurship, and if they want to break into your industry, what they should know about.
Well, see, I mean, as a youngster who's probably looking to start something of their own, looking to build their own brand, I think India is in a great place right now with AI coming in, with ordering patterns completely changing, with video commerce becoming really a big thing. Today, influencers generate more orders than the traditional Google and Facebook marketing schemes that we are looking at. I think the thing to focus for anyone coming into this sector, coming into starting their own brand, is probably to focus on some of the new age trends, new ways of acquiring customers, building the right product, creating a differentiated sort of a product, which probably was available offline, is not available offline, and then building a brand on top of that.
All right, so that's the mantra. All the young viewers, Gen Z folks listening, do take note of it. He was also once a student and then now he's having a market share of 23% plus. It's always a pleasure to talk with you, Abhishek, on the company and the future outlook ahead. Thank you very much. It's always a pleasure. Thank you. So this is Shadowfax. Of course, 4 to 8 quarters, that's the bullish tone coming in when it comes to even the margins as well. An interesting view coming in if the young folks want to enter into this business as well. Pretty interesting conversation here, but that's all folks for KYC. Stay tuned to NDTV Profit.